HIMS and Hers and UnitedHealth are two stocks in the healthcare industry. Well, you can argue one is pharmaceutical, one is healthcare, but I'm looking at it broader in the healthcare industry that have been in the news a lot lately, right? UnitedHealth had that huge stock price crash. The CEO was replaced. They removed the guidance for 2025. HIMS and Hers, of course, had that big public breakup with Novo Nordisk earlier this week. The big stock price crash falling more than 35% on the day of that news and then recovering. So both of these companies have been in investors' minds in 2025 and more recently. So investors are curious which one is the better stock to buy, HIMS and Hers or United Health Group. I'm going to answer that question in this video by comparing these two companies and sharing with you some critical financial details, looking at their returns on investor capital, and sharing with you my proprietary discounted cash flow valuation models for these companies, which calculates a fair value for these stocks, and coming to the conclusion on which one I think is the better investment for long-term investors today.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first thing I wanted to compare these two on is the returns on investor capital, because it highlights a notable difference between HIMS and Hers and UnitedHealth. The return on investor capital measures how good a company is at taking investor capital and turning it into products and services that generates profits and cash flow. HIMS and Hers has done a phenomenal job in this regard. Its return on investor capital reached 40% in 2024 and remained there in the most recent trailing 12-month period. Meanwhile, UnitedHealth has been more consistent, but showing a lot less improvement. Its return on investor capital increased from 10.3% in 2020 to 11% in the most recent trailing 12-month period. 11% is a reasonable return on investor capital, especially because it's higher than the company's weighted average cost of capital. HIMS and Hers, the 40% number, is a really strong number. Few companies in the world generate returns on investor capital above 40%. So HIMS and Hers is in a very, very unique category with the returns on investor capital. So let me share with you my proprietary discounted cash flow valuations. HIMS and Hers, I'm forecasting its free cash flow will grow from $280 million in 2025 all the way up to $960 million by 2030. Management has told investors that they expect their revenue will more than triple between now and 2030. I've got a video on that I'll share with you at the end of this one. Management also expects the company's profitability to soar during that time. So that's partly why I'm forecasting the company's free cash flow will more than triple over these next few years. Already, HIMS and Hers, I should say, management team gave investors a forecast of what they believed they could achieve in terms of revenue and profitability. And they gave us this forecast in 2022. And they hit that forecast 1 year ahead of schedule. So looking at the forecast ahead to 2030, I can be reasonably confident that the management team will hit these targets because they've already hit a long-term target they set in 2022. Now, I can't be sure they'll hit it. I can just be reasonably confident. Nobody knows what's going to happen in the future, and especially because that forecast that management gave investors happened about a month before the breakup with Novo Nordisk. So I'm curious to see when HIMS and Hers updates investors again, if they reiterate that longer-term forecast, or if they revise it downward because of the breakup with Novo Nordisk. Overall, I expect the company's present value of all of the free cash flow they will generate between now and the very long run to be $8.6 billion. The discount rate I'm applying for HIMS and Hers is 15.3%. They have a relatively high beta for a healthcare company at 2.1, and this has been a very volatile stock. And remember, the beta measures the volatility in the stock price. Usually, healthcare companies have very low betas because they're not as strongly correlated with the broader economy. People don't look to healthcare when they get a promotion or when they get a new job, right? They look to healthcare when they have a healthcare need, regardless of their position in the economy, whether they're getting a promotion or getting laid off. The intrinsic value, or what I believe these shares are worth today, is around $41. The current market price has bounced up and recovered back up over $49 per share. Meanwhile, United Health Group, the present value of the free cash flow I expect this business will generate between today and the very long run is over $483 billion. That just demonstrates the vast difference between the size of these two businesses. United Health Group, very mature company, while HIMS and Hers is still in the very early stages of growth. HIMS and Hers is very likely to outgrow United Health Group over the next decade and over the next 2 decades, very likely. The discount rate I'm applying for United Health is 10.73%. And I've adjusted the company's beta higher because, like I mentioned, it has a relatively low beta, but there are increasing risks with United Health given their recent struggles, and they removed the forecast for 2025. Still, even after applying a higher adjusted risk, the intrinsic value per share I calculated for United Health Group is $535, and the current market price is $309, suggesting this stock is significantly undervalued. Similarly, when I go to the forward price to earnings ratio and compare these two on this basis, HIMS and Hers is roughly 4 times as expensive as United Health Group. Now, I do believe and I agree that HIMS and Hers deserves a premium valuation compared to United Health Group. HIMS and Hers will grow revenue much faster than United Health Group, and HIMS and Hers has a much better return on investor capital compared to United Health Group. So it deserves to be trading at a premium valuation. But at a premium of more than 4x or roughly 4x, I think it's a little overdone. And if I had to pick between these two companies, I would pick United Health Group as the better stock to buy today. By the way, I'm getting these charts from fiscal.ai. If you want access, there's a link in the description for a free trial. So overall, these are both excellent companies, and I have them both rated as a buy. But if I had to pick one, I would pick United Health Group today. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.